Assalamu alaikum. Today we are going to talk about documentary records. Documentary records will be covered in two videos. The first video will talk about what kind of documents we are using, and we'll cover some of them, and the remaining will be covered in the second video. First, we start with saying business documents are used to record sales, purchase, and payments. So the types of transactions that we have are purchase, sales, and payments. When service or goods are sold on credit, the record should include. So we are talking now about sales. When we sell something, we need to have certain information kept in our records. Record should have customers' details, including name and address, and type and amount of ordered supplied items, ordered or supplied items, price of individual items, and total price, including any discount and carriage and delivery charges, if any. And of course, we need to have the date of the transaction. Last thing that we have to have is the payment terms, when payment is due and how it's going to be paid, and if there is any cash discounts. When service and goods are purchased, we need to have certain information to be included in our record, similar to the sales. Look to the supplier's details, including name and account details, type and amount of received goods and or services, price of individual items, and total including any discount. Also, we need to have information about delivery and carriage charges, and we need to see the date as well. Payment terms has to be mentioned also. When we do sales, there's an invoice. The sales invoice might include a word called, or a terminology called OE and OE. What does it mean? It's errors, that's E, and omission are expected. This is a reservation that's made by the invoice issuer to say that if there is any mistake or anything that was not included in the invoice, we will have the right to correct the invoice and claim the right total. So, when the business receives an invoice, it should carefully check it to make sure that it's correct. So what we check? We ensure that the invoice is in the business name. So it's our invoice, not other entities' invoice. Order reference quoted is the same as the purchase order. So we compare it to our purchase order and make sure that it matches our purchase order. We make sure that it's in the business name, make sure that it matches the purchase order. Third thing, listed items match the received items. We received what's being charged to us. Listed price is the agreed upon price, regardless if it's through the offer, if it's mentioned in our purchase order, or if there is pricing agreement with the supplier. All calculations correct. You have to review the calculation. Don't depend on the invoice that's generated automatically, so you have to do the calculation. It contains any discount agreed on. If there is any agreement on discounts, it should be included. After all checks are satisfied, then you can do the payment for the invoice. Now we talk about debit note. Sometimes we receive wrong items or we receive destroyed items, so we return them. And then we do what we call debit note. What's a debit note? Debit note is a request from the customer to the supplier to reduce the invoice's amount. And debit note is issued when supplier has made a mistake and has overcharged the customer. Maybe it's a mistake in the calculation. Goods were not received, lost or stolen. Some goods are missing. Customer has returned unsatisfactory or damaged goods. Debit note should include certain information. These information are name and address of the supplier, name and address of the customer account number, and relevant invoice number. This will help the supplier to trace the request. Details of the goods returned or overcharged for, including quantities, prices, charged and discount if any. How much in total the supplier owes the customer, total of the note, and the date. Then the credit note will be issued by the supplier if the debit note is approved. So it will be the total price charged to the customer on an invoice is more than the amount due from the customer. Credit note issue when supplier made a mistake and overcharged the customer, or the customer didn't receive the items because they were stolen or lost, or they were not satisfactory for the customer because they were damaged. Purpose of the credit note is to record an overcharged amount and should contain the following. The credit note should contain the following information: name and address of the supplier, name and address of the customer, customer's account number, relevant invoice number, details of the goods returned or overcharged or overpaid, payment if any. We can summarize the documents involved in a business transaction as follows. We have the customer and we have the supplier. Customer start doing the purchase order, going to the supplier. When supplier receive the purchase order, they do order confirmation, send back to the customer. Then they do the delivery note when they execute the purchase order. Then they do the sales invoice. So one document sent from the customer to the supplier return 3 documents. That's confirmation of the order, delivery note, and the invoice. That should match the delivery note, and delivery note should match the purchase order. Then, if the customer have any objection on the sales invoice, they do debit note. And if the debit note goes to the supplier, and the supplier will do the credit note, and every month they do what they call statement of account. With this, we'll finish the video, the first video, and we'll see you again in video 2 to continue the documented videos. Thank you.